When you layer all 6 of those decision criteria on top of something, then you're only saying yes to things where you have a built-in advantage that can make you money. You're super passionate. You're willing to work hard on it. It's not overly crowded and it plays off of your biggest strength. Then you're probably going to do well, whether the market's going up or down. If you're doing things that don't fit all 6 of those criteria, then you might get squashed by the market more easily. And the best investors and investment managers have strategies where they add a lot of value to an asset. So they acquire it and add so much value that even during a downturn, they're able to pick up assets and weather through a storm in the economy. So I think that's the most important thing.
Thank you for joining us again today as Richard and I continue the conversation about operating a family office, when to start one, and even some tips at the end that are going to be very special to you, I think, as a listener. I know they are to me, and I even made an offer to the first listener that does something. So I hope you listen to the end of the show. Don't forget to like and subscribe the show. Please leave us a comment and a 5-star review. I would be forever grateful for that. Don't forget to share it with your friends so they can also learn and grow their business or invest better. Here we are again with Richard and I. Good morning, Richard, and welcome to the show. Honored to have you on. I've heard nothing but amazing things over many years now. I can't believe you and I haven't met before now, but you have become just the expert around family offices and what that even means. And oftentimes, or actually we've talked about it a few times on the show. Can't believe out of 1,200 episodes, we've not talked about it more than we have. However, I know there's listeners who wonder, like, what is a family office? And is that something I should be pursuing? That type of thing to work with or to partner with us, is that even an option? Maybe we can go over some pros and cons today, because I know you know those ins and outs. What are, majority of the family offices that you're working with, what are they investing in right now?
Right. Biggest change has been taking serious of cryptocurrencies since the pandemic started. So it used to be that almost none of my clients put money into it. Now, almost all of them put a little bit into it. It's not like they put in huge chunks, but they are putting some in. The other change is that healthcare fared well through the pandemic, specifically medical practices and dental practices. So there's been a surge in demand there. We've closed on 7 investments in 2021 that were either into medical practices or the deals were closed with doctor and dentist capital going into like real estate assets, let's say. So those are 2 things. The other thing is short duration investments. If somebody can get in and out of an investment in 1 to 3 years, that's more popular now than it used to be because the world seems to be changing so quickly. They'd like to have half their money off the table in just 6 months and then have those staged over time. There's always money rolling off of a deal. So if the world changes, the money that had just rolled off a couple of months before, they could allocate back into the industry versus being illiquid for a really long time. So those are some of the most popular ones we've been seeing.
And, as far as the ones that own a lot of real estate, specifically, or commercial real estate, are they mostly buying or selling right now?
The holders of multifamily who have been in multifamily for a long time are net sellers. They'll still look at buying because they have the skill set of adding additional dwelling units, and turning the garage into a studio apartment or something like that. So the people who are very savvy realize the market is so high that they do want to sell right now a lot of assets that are priced really well, and they're having a hard time finding assets to buy. But the person who is not as savvy on that are not as much net sellers. They're usually passive in other people's investments, and they are allocating because of inflation. Most investors think there's 1% a month of inflation right now. And so there's been a rush to get cash to work within assets, but some believe the inflation is going to continue for 1 or 2 years. Some people think it's going to be 5 to 10 years is what one private banking report came out with this week. So it depends on whether the person is really only focused on multifamily as a big investment fund or sponsor, or whether they're a passive investor, but there's a real feeling that money needs to get put to work or you're going to get left behind with inflation.
Before we move to a few final questions, one more thing. As far as what the family offices are looking for right now, when specifically, say, investing in commercial real estate, or maybe specifically multifamily, what are they? Let's say they already have the relationship with an operator. Maybe they haven't done a deal together yet, but they've already built that trust there, right? We're not worried about that at this point. However, what type of deal are they looking for? What makes it, the deal for most family offices to truly consider, hey, this is going to be a great opportunity for me? Maybe it's returns, or it's probably outside of returns most of the time. But what does that look like?
Yeah, I think that novices in business, like when you're getting your MBA or in business school or something, and you're afraid someone's going to hear your strategy. You're like, oh, I got to keep this strategy secret, or someone's going to take it. But just like your strategy of producing 1,200 podcast episodes over the last couple of years, the reality is you can say that, but no one else wants to do it. It takes a ton of execution, like just like me writing 13 books, like who wants to do that, right? Only the really motivated, focused person. So what people mistake is that they think it's about the investment strategy and they think someone's going to steal it. That's wrong. Some people think, it's all about promising the biggest returns. That's wrong. We talked about that in the trust factor. It's a lot about the execution, but also what doesn't get talked about nearly enough is the structure of the deal. I'll let you choose any deal strategy. And if you allow me to structure the deal, I can make it an amazing deal for me, where I have none of the liability, all the cash flow, all the profits, and the other person could get nothing. But people don't custom negotiate structures. They don't custom set up structures. They don't think, okay, well, maybe when I'm a passive investor, I just have to go into whatever structure they offer me. But when I'm not passive and I'm investing my own portfolio into operating businesses, like yesterday, we had a due diligence call with a medicinal, like psychedelic mushroom company in Canada. It's kind of early on that trend, kind of like the cannabis trend. And when you're negotiating those types of private deals, you can set up a structure pretty much however you'd like, as long as it complies with securities laws. And people overlook that. So the savviest of investors custom structure their deals. My billionaire client that we've closed 5 or 6 deals with, my $1.2 billion REIT client, the shark from Shark Tank I've closed 2 deals with, they all custom structure their deals. A new ultra wealthy investor, small private investor, never custom structure their deals. And they don't even negotiate the fees. They just go into whatever people offer, So I think that is what investors should be looking for. And the savviest, largest ones do look for above everything else.
So they're going to work with that family office to ensure it's favorable for them, right? And be willing to be flexible, I guess. I think, some people I've heard this and maybe this is a myth. I just want you to, kill this myth if it is a myth or not. But, some people say, well, I don't want to give somebody that much control of a deal, or they're going to want too much control or too much power over the project. Or, I hear that often. What are your thoughts around that?
Yeah, this comes up often with one of my top clients. What we do is we find the best of breed independent sponsors in private equity and real estate, and we sign $300 million JV equity term sheets. And we roll out the $300 million of equity over 5 or 10 deals over 3 to 5 years with them, when it could be more deals than that. But what's interesting is some people are saying, we'll put 97.5% equity of a deal. They only have to put up 2.5% as the sponsor. And if they run dry powder, then we'll help them out on that and back it out of fees or something. But what's really interesting is hearing some people say, why don't you guys have full control? And we're like, yeah, but it's 97.5% of our money. And they're like, oh no, I'm just not comfortable with giving up control. And we point out that you didn't have control yesterday of the 300 million. And if you don't like that, then someone else is going to have, the management contract and earn millions and millions of fees per year off of this agreement. So it's not like you've lost anything, right? Like, I guess if you're time constrained and it's just too annoying to deal with an extra $20 million or $50 million to manage, and you don't want that to build your infrastructure to serve with smaller private investors, then okay, maybe turn away the money. But the sophisticated funds and sponsors understand there's different layers of the capital stack. And you've got institutional investors are going to want one thing, and big family offices want another. The $20 million net worth families want something else. They care about cost segregation and bonus depreciation, et cetera. And the small investors might just want passive income and a decent return that's hands off and easy to understand. So, you wouldn't have controlled the money if you didn't get their investment done. So I just open your brain to, okay, I'm going to put this person in this box, and this is a different part of our model, et cetera. And those are the people that grow the fastest out there.
No, that's incredible. You're not going to control it at all anyway, right? If you're not willing to be somewhat flexible, again, like you're talking about, that's a great answer. So Richard, what about any predictions that you have to say in the real estate market over the next 6 to 12 months?
Yeah, I think that inflation is just going to continue as is. I think that conferences have been opening back up. I think they're going to even more. I also think that there's going to be a few niches that do better than others. I think medical office building, that's an area where we've been spending a lot of time with a couple of sponsors there, trying to open up our clients to putting more into medical office building assets, because it's not as overheated as self-storage, industrial, multifamily. I also think areas like parking lots, mobile home parks will be growing in popularity with the average investor. We're also excited about, we're developing a model where we take luxury vacation homes in 50 different cities, and investors put their money in there, and then they're able to stay at the home for free, but we rent it out on 50 short-term rental websites. at a time so you can enjoy the asset. I think that since the pandemic started, people have realized, you know what, like you never know what's going to happen with the economy or even your own health. So having more of a focus on health and investing in that as your most important asset as an ultra wealthy investor has become even more important. And realizing that your money might go into 50 different assets. If one or two of them you could actually enjoy and have fun and create memories for everyone in your family and kind of build memories around the legacy of what you've built and feel the rewards of it versus just looking at a number in a bank account, then that combination of health plus making sure you're enjoying your life and not working on only things that are just business or with people you don't like, et cetera, is something that has been coming up with some of my clients as well.
How do you like to see an operator prepared for a downturn, a potential downturn, or maybe how a family office likes to think about that, when they're investing with an operator?
Yeah. So I think what's key to this for private investors listening or an investment management firm, the key for us at least, is thinking through your decision filters on what you say yes to versus no to. So Jim Collins has this hedgehog strategy of only doing things that fit your DNA, what you're passionate about, and what can make you a lot of money. And if you don't do things that meet all three, someone else is going to run circles around you like you compared to some guy who does one podcast episode a month, right? Like, we don't even know that guy's name because you're passionate about it and you know how to make money off this and you obviously are good at it. So, but on top of that, I layer on top of that, what's your biggest strength as a person? What has inevitably more demand in the future and growing demand, and what is not too crowded? It's not like you're going to be one of 1,000 people in that niche. So when you layer all 6 of those decision criteria on top of something, then you're only saying yes to things where you have a built-in advantage that can make you money. You're super passionate. You're willing to work hard on it. It's not overly crowded and it plays off of your biggest strength. Then you're probably going to do well, whether the market's going up or down. If you're doing things that don't fit all 6 of those criteria, then you might get squashed by the market more easily. And the best investors and investment managers have strategies where they add a lot of value to an asset. So they acquire it and add so much value that even during a downturn, they're able to pick up assets and weather through a storm in the economy. So I think that's the most important thing.
Richard, what's your best source for meeting new investors right now?
Well, we've spent 14 years building up our investor funnel, which just means like our whole platform. So I would say it's kind of cheating to say our live events. I don't think that's too helpful to other people that don't run, a live event company. Being on podcasts has been very helpful. If I go back in time, what was most helpful before I had my own conference company so people could relate to it is speaking in front of a room of really hot, highly qualified people. So if you are raising capital or if you are trying to get work done for like a legal tech company, going to the 4 or 5 most prestigious law firm partner associations and annual conferences and speaking in front of them so they can invest in what you're doing or partner with you or source opportunities for you would be the most powerful thing. And I think it's just really important when you're growing a business or raising capital or as a private investor trying to get deal flow to think, what would make it inevitable that I have really good deal flow or just tons and tons of investor leads, and then figure out where those people are congregated who own the assets you want to buy or who are the investors you want to work with, and you just get hyper focused on that. Like I used to pay $50,000 a year to be in the business owner club, and it was great. And I got great ideas and made some good friends and we've done some deals together. But nowadays I spend more money on other niche, smaller groups that give me a 5 times higher ROI because, for example, if I go to a doctor event and we invest in medical practices and healthcare deals, I could meet a couple of investors, but I could also source a piece of deal flow and I could source both in the same room. And in a generic room, you can't do that because there's people from every different industry. So there's a value to that, but being more niche focused on exactly what you want to source has been the most helpful thing.
That's incredible. I love that response and thinking through who your clients are and where they're at, right? And really who your customers are. It goes back to even some basic marketing as well and just thinking through that on a bigger scale. And you've done that so well. And you've mentioned this a few times during the show, just about being so disciplined. I know you talked about my podcast and then just what you have accomplished over many years now, writing so many books. Most people are not going to be that dedicated or disciplined, right? I love learning more about self-discipline, obviously military law enforcement background. I love that, and just working on self-discipline all the time, reading about it. And so what really pushed you in the beginning to become so self-disciplined? I mean, very few people have written that many books, around these topics. And so no doubt you're somebody of self-discipline. Where did that come from? How did this come about? Just the desire to be that disciplined?
Growing up, I had started 5 businesses before I got out of high school, and I'd always played a lot of sports. Genetically, I'm a pretty average American guy. I'm not like extra tall or, extra something but I loved competitive sports and played some in high school, college, etc. So potentially the combination of those two things. When I finally got going in the family office space, it was kind of combining the rigor of training for sports to, the family office industry, and really just training harder than some others to be more dedicated to it. I think also when you start many different businesses and then you start one that actually works and people actually want what you have, it's kind of refreshing and nice after like falling on your face a bunch of times. And then you appreciate it. You don't take it for granted. You say, hey, I have something here. So as long as I can, I'm going to really take advantage of that and add the most value I can to this niche. And then the final thing was, Jeffrey Gitomer was one of my mentors early on, along with Evan Pagan. But Jeffrey Gitomer told me that, if you add value to people who could say yes to you in a certain business niche or opportunity, and you add value to them just once a week through like a newsletter or an article or a video, etc., and you do that for 1 to 2 years, you'll be a local expert. And if you do that for 3 or 4 years, you'll be a regional expert. If you do that for 5 to 7 years, you'll be a global expert. When I read that, I hadn't heard of the family office industry yet, but I said to myself, oh, I'm for sure going to do that. I just don't know the niche yet. And I'm going to use that formula on. But I liked any formula where all it took was a whole bunch of focus and hard work, because then it de-risked it. And I knew, okay, well, I know I can do focus and hard work. So I want to control my destiny. And that gave me a formula to control it. I just needed to find the right niche. And then when I found the ultra wealthy niche of family offices, I said, oh, okay, I can't find anyone to be helpful to me on this topic. And these are the richest people on planet Earth. And nobody's talking about it really, like so backwards, that I kind of went all in on that and then started putting out a ton of content and kind of got the rewards of doing that.
Awesome. I can relate to that to some extent. That's incredible. What about some daily habits that you're disciplined about that have helped you achieve this level of success?
Yeah, sure. So exercising and health is definitely one. I think getting 7 hours plus of sleep, don't always succeed at that. That's been a top priority. I think most important that's unique to share, because I think probably both of us are doing a lot of things every day, is that I know what my monthly goals are, my quarterly goals, my annual goals. I have a theme for every year. I have a media plan. Like, for example, 1 year I only consume podcasts and books from Dan Sullivan. In 2022, I'm going to be only listening to podcast episodes and reading books and white papers and articles from billionaires. If they're not a billionaire, I'll wait till 2023. And then what I do is I put also, when I read a really good book or go to a conference and hear an idea that I just know, just like that Jeffrey Gitomer formula, that if I put that in place, it would just reap huge rewards, or it's exactly what I need to do. So most of us know what we need to do, but we don't actually do it, right? Like you could summarize the whole diet health industry with like move your body around and exercise, eat clean food that's not processed, and sleep enough, right? And like everyone knows that, but I don't know any human being that does all 3 of those things really well consistently, like not very many at least. So what I do is I summarize I'll summarize a whole book in one line. And then I put all those one-liners on this one pager I have. And the one pager has my theme for the year at the top, my monthly goals, my quarterly goals, my annual goals, and then a whole bunch of one-liners, like 40 different one-liners at the bottom. And then I laminate that and I put it in my office. I travel with it. I put it where I shave every morning. And while I'm shaving every morning, I read that over, and it's like my compass. So now I'm interpreting my email inbox and everything during the day based on what my goals are and where I'm going. And that's my roadmap or my airplane cockpit kind of control center of my rules for living and where my energy is going to flow. And that's been super critical and really helpful. Otherwise, you read a great idea, you forget to implement it, or you have a goal, but you don't look at your goal list for a couple months, or you just get off track on what you're trying to get done for the year, et cetera.
That's incredible. Could you give an example or two of a one-liner like you're talking about?
Yeah. So one of them is, what you do is more important than how hard you work. One of them from Dan Sullivan is, you're going to put the time in anyways, so you might as well enjoy life. Another one that I have is just a reminder to listen to billionaires. Another one from Brendon Burchard is, you need to take bold, massive action. Another one from Tony Robbins is that everyone's obsessed about strategy, and you go to MBA to get strategies, you go to conferences to get strategies, you read books to get strategies, but the state of your mind and the story you're telling yourself is probably at this point more important than collecting more and more and more and more strategies. And so I have a reminder about that in there as well. And then I've got people who have been mentors to me. So at the bottom of the page, I have 8 headshots of a little square headshot of these people. They're kind of my kind of board of advisors that they don't even know they're on there. But I just kind of think, what would they do in this situation? Or what would they suggest if I had a conversation with them, et cetera?
I've interviewed 1,200 plus people now, and I've never heard that before. And I think it's incredible. I mean, I've heard different things similar, but not exactly like that or that detailed. How do you create something like that? Or is that just like kind of continuous work in progress?
The best part about me suggesting that to your listeners is that it costs absolutely nothing. You don't need to go to my website and sign up for some trial membership to pay me for it, right? It's just free. So I just create a Word document, plan out your year, and have your 3 to 5 or 7 annual goals. Every month, I have 5 areas of goals and 2 to 3 actions I want to get done within those areas. Quarterly goals, I set up 5 big rocks for every quarter I want to make sure to get done. And I just have that flow down the top half of the page. And the second half, whenever you read a really great book, then I shoot myself a little email with a summary of that idea or that concept to add it to my dashboard is what I call it. So I'm always adding it and modifying it. And I take off old one-liners that aren't as valuable to me anymore, et cetera. And then just think who's been the most inspirational. Like, who do you want to be when you grow up? Like, one of my clients, he has, probably, 30 different companies and does over $1 billion a year in revenue, but he really enjoys his life. He's laughing at every meeting he goes to. He's constantly traveling. He's having a great time while closing these big deals. And I want to be like that when I grow up. So, that's someone that I have on my one pager. And then I have for example, Jeffrey Gitomer, because I mentioned him earlier, Evan Pagan on there, Dan Sullivan, et cetera. So it's pretty simple. There's no real secret to it or trick. If anyone, wants feedback on how to do it or whatever, they can just shoot me an email at richard@familyoffices.com. And I'm happy to give them feedback or whatever, but it's not rocket science. But what's interesting is that nobody does it. So I've told this to my best friends who I know super well, and they take advice from me and I take advice from them. I say this to groups of doctor investors and private investors and people at our workshops. I don't know of a single person who's done it. People often say, oh, wow, that's a really good idea. I don't know anyone who actually does it. And that's the whole thing, is like the execution is all that matters. And this is like an execution dashboard. Like, every day, this is what I'm going to execute on, and almost nothing else matters,
Love that. And I tell you what, I was just thinking about this and how no one does it, right? We all go to those workshops like you're talking about. We hear different strategies, all these things, but very few of us actually put something into work. And I was going to tell the listeners right now, the first listener that sends me their one pager like this completed, I'm going to have a special gift for them. So I just want to encourage the listeners to, hey, let's take some action and take advice from Richard here and complete this. I'm going to tell you, the first person that sends me their one pager, you're going to get a special gift from me. And all right, quickly, Richard, if you had to say, hey, the one thing that's contributed to your success, what would that be?
It's integration or integrity of a lot of different things in life. So I think people think of integrity as like morally aligning your actions with that good values. But I see integrity as integrating the media you consume, the food you eat, the clothes you wear, where you live, who you work with, your business model, your pricing, everything that you have in life. If you can align all of it, then it just helps each other and things go easier. It's less of a struggle and there's less friction. But if you wear sweatpants into a meeting and you only slept 1 hour to play video games all night, you go to a really important meeting, there's going to be some friction there and it's not going to go too well. So just the more alignment, the better, I feel. And when you get your one pager done, Whitney, I've got a special gift for you as well.
I appreciate that. In a big way. And how do you like to give back?
You mean like nonprofit wise, charity wise, et cetera?
Yeah, any way that you enjoy just giving back.
Yeah. The first way is I really believe that if you run a business the right way, your employees get the benefit so much from being inspired by good leadership, getting paid more than other people would pay them because you align interests and make it so that their performance compensation really rewards them handsomely if they're great, and you just get them off your team if you're not. We have a division called investorresidences.com, where we're buying luxury homes to rent out. Investors can stay there while I rent them out. And what we're trying to do is help build one house for people in other countries, like in a poor village or for homeless kids or an orphanage, et cetera, trying to build one house for every house that we buy in that network. And that's something we got inspired to do through Jeff Hoffman, who's one of the founding investors in Priceline.com and Booking.com. And we're also giving $100 Visa debit cards to all of our employees on Sunday this weekend. We're going to tell them to go out and find someone in their community that they want to help. They could buy Christmas presents for someone who lost their job, for their kids, or they could use it for someone who's just having a hard time, with their husband or wife, or they could use it for someone who's homeless and help them buy them some blankets or something. And in that way, we allow each of the employees to go out and feel like they're helping someone else and get that same good feeling of being able to help somebody else. So those are the couple things that we're most focused on. But we really try to make sure day to day that we run the company in a way that is genuinely helpful to people who are on our podcast or at our conferences, but also to our employees. And then they pass that on to people like our customers,
Awesome. Richard, it's been an honor to get to meet you finally and have you on the show. I know the listeners and I both have learned a lot about family offices, so many details that I'm so thankful came out during the interview, but even some more personal stuff about self-discipline and obviously the dashboard one pager, which I encourage listeners to, if you missed that part, and you go back and listen to that with a special offer. So I'm just grateful for you being so transparent, willing to share and helping so many people, getting into this industry and learning these things. Tell them though, how they can get in touch with you and learn more about you and the Family Office Club.
Yeah, it's just 3 quick places. If somebody's here because they're raising capital, then just go to capitalraising.com. We have a free book for you there. If you're curious about family offices and you want to learn a lot about that and see one of our live events, et cetera, we do 15 live events a year. That's at familyoffices.com. And we got a whole bunch of free stuff on there. That's our whole business model, is to help people out. And then if they want to join as a member, we have a $99 trial for new members that are raising capital, and it's free for investors. And then the last place is investorclub.com. If you're a passive investor and you want to see the best of the best investments that we see out of 1,000+ deals a year, or work with us in some way as an investor, just go sign up at investorclub.com. And it's free to join. There's no annual fee. There's no fee when you invest. If we do a deal together, just a small profit share on the back end.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the #1 resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.